Every war needs soldiers, but modern wars need something else, investors. When the United States entered World War I in April 1917, it walked straight into a brutal math problem. The war was going to cost tens of billions of dollars, more than anyone in Washington had ever dealt with. Just a few years earlier, the entire federal budget had been under $1 billion. Suddenly, the country wasn't funding postal routes and pensions. It was funding tanks, artillery, ships, rifles, uniforms, and oceans of ammunition. The numbers didn't just go up, they exploded. The government had 3 basic options. It could print the money and gamble with inflation, it could raise taxes sharply and risk a political revolt, or it could borrow on a scale that no democracy had ever attempted before. The path chosen would reshape not only how the war was paid for, but how ordinary Americans understood their relationship to their own government. The plan was deceptively simple. If Wall Street couldn't shoulder all of it, Main Street would. Housewives, factory workers, farmers, shopkeepers, immigrants, school children with nickels and dimes, they would all be enlisted into a new kind of army. Not with uniforms and rifles, but with savings accounts and small envelopes of cash. The weapon was a piece of paper called a Liberty Bond. On paper, it looked like a straightforward financial instrument. In reality, it became something far more powerful and far more intrusive. Liberty bonds weren't just about raising money. They were about selling the war itself. They turned patriotism into a financial product, and financial obedience into proof of loyalty. Buying a bond became a test, not just of your savings, but of your soul. At first, it didn't work very well. The first Liberty loan was launched in the spring of 1917. The bonds paid a respectable interest rate for the time, 5%, with a long maturity. To bankers and wealthy investors, it was another government security, a familiar tool. But to the vast majority of Americans, this was strange territory. Most people had never owned a bond. Their financial world was cash, maybe a bank account. Stocks and bonds belonged to another universe. New York, suits, newspapers filled with tiny numbers. The government assumed patriotism would do the heavy lifting. The reality was much harsher. Sales were sluggish. Some of the bonds that did sell began trading below their face value on the secondary market. The Liberty issue, marketed as a safe and noble investment, was quietly signaling that investors weren't as enthusiastic as Washington hoped. Officials were furious. Instead of asking whether the terms were unattractive or whether the public simply didn't understand what they were being sold, the suspicion turned outward. Stockbrokers who dared to sell Liberty bonds below par were labeled unpatriotic. One well-known broker who had discounted bonds was pressured into buying them back at full price and then publicly making a huge donation to the Red Cross, as if paying a moral fine. The signal was clear. The bond market was no longer just a marketplace. It was becoming a battlefield, and pricing wasn't just about supply and demand. It was about loyalty. The government had decided to win this fight, not by making the bonds more appealing as investments, but by making refusal socially and morally dangerous. That required a different kind of weapon. Not accounting, but persuasion. The man at the center of this pivot was William Gibbs McAdoo, Secretary of the Treasury. McAdoo understood numbers, but more importantly, he understood people. He knew you didn't outsell a 30-year bond to a small-town grocer by talking about yield curves or debt maturities. You sold it by talking about duty, sacrifice, and belonging. So he began to build one of the most aggressive public campaigns ever mounted in American financial history. The country had a new central bank, the Federal Reserve, still in its infancy. It had rapidly expanding newspapers, telegraphs, and a movie industry. It had an increasingly coordinated federal apparatus. All of this could be turned toward one task: convincing a skeptical public that lending money to the government was a cold transaction. It was an act of faith in the nation itself. The result was a tidal wave. Posters began to blanket walls and windows across the country. You couldn't walk down a main street without seeing sharp colors and bold slogans. A stern statue of liberty pointing at you, soldiers charging across no man's land, mothers clutching their children while dark figures loomed in the background. If you can't enlist, invest. Beat back the Hun with Liberty bonds? Will you fight or buy bonds? Every image carried the same message. If you weren't at the front, then your bank book was your rifle. McAdoo and his allies didn't stop at posters. They created a volunteer army of speakers known as the 4-Minute Men. These men would stand up between reels at movie theaters and church halls, union meetings, town gatherings, anywhere a crowd had gathered, and deliver 4-minute bursts of persuasion. 4 minutes was calculated, just long enough to stir emotion, not long enough to bore. They spoke of boys in trenches, of ships needing steel, of duty and sacrifice, and, at the end, the pitch. Subscribe to the Liberty Loan. Do your part. Hollywood joined the effort. Charlie Chaplin, the most famous film star in the world, made a short piece called The Bond to promote the drives, mixing slapstick with patriotic urging. Douglas Fairbanks and Mary Pickford appeared at massive rallies, personally selling bonds to roaring crowds. Boy Scouts, Girl Scouts, and school children turned into miniature sales agents, going door to door under slogans like "Every Scout to Save a Soldier." The entire culture was mobilized as a sales force. It worked, because it did something more powerful than explain. It is moral. Buying a Liberty Bond stopped being a simple financial decision and became a statement about who you were. The question was no longer, do I think this is a good investment? The question was, am I loyal? Am I a good American? Will I stand with our boys, or will I hide behind excuses? That's where the true pressure began. Across the country, bond committees sprang up inside every imaginable institution: churches, civic clubs, businesses, labor unions, fraternal organizations. Each was given a quota to meet. Newspapers published honor rolls of subscribers. Workplaces tracked participation rates and sometimes posted them publicly. Small towns knew which families had bought and which had not. Social life and financial decisions fused. Imagine living in a small Midwestern town in 1918. The Liberty Loan Office has issued your community a target. The bank window downtown displays a giant thermometer chart showing how close you are. Your name, your employer, your church group, your club, all are being watched. If you haven't subscribed yet, people know. Your neighbors are knocking. Your pastor reminds the congregation that the boys over there are giving their blood. Surely you can give your savings. Not buying a bond no longer meant, I can't afford this, or I don't understand the terms. It meant, I'm not one of us. Aye. Immigrants felt this most sharply. Many were desperate to prove their Americanness. Posters appealed directly to that sentiment. Images of the Statue of Liberty paired with slogans asking newcomers to show gratitude for their new home by buying bonds. Loyalty wasn't just flags and pledges anymore, it was subscriptions, tallied in ledgers. In theory, Liberty loans were voluntary. In practice, social pressure made refusal expensive. People who hesitated could be labeled slackers, disloyal, even pro-German. At a time when dissent could be prosecuted under new wartime laws and criticism of the war effort carried real risks, saying no to a bond salesman was more than a financial decision. It was a political act. Yet, if the emotional machinery was intense, the financial reality was more complicated. The bond drives were, by most measures, a success. Over 5 separate campaigns, the 4 Liberty loans and the later Victory Liberty loan, the government raised roughly $17 billion from the public. Millions of individuals subscribed, many for the first time in their lives. The image promoted in posters was not entirely false. Small investors really did participate. School children filled little booklets with stamps, which could be traded in for bonds once complete. Workers bought them through payroll deduction plans. But money does not lose its nature just because it is wrapped in a flag. The interest rates paid on Liberty bonds were modest, especially once inflation and alternative opportunities are considered. Wealthier investors, who understood the markets, could buy and sell the bonds on the secondary market, sometimes taking advantage of price swings that smallholders barely understood. Some ordinary buyers later sold their bonds at a discount when they needed cash, taking losses on what had been sold to them as a sacred duty. Even the structure of the bonds carried hidden complexities. Some issues included clauses promising payment in gold of a certain standard. To the average buyer, that sounded like ironclad protection. Decades later, when the United States altered its relationship to gold and redefined the value of the dollar, those promises lost much of their meaning. The letter might have been honored, but the spirit shifted quietly beneath people's feet. For the government, the bonds were a triumph. The war was financed. The nation emerged as a major creditor to the world. For the financial system, they were transformative. Banks became more deeply intertwined with federal debt. The Federal Reserve learned how to support the Treasury market. The idea that ordinary citizens would hold government securities became normal. For the small saver pressed into the war loan drives, the outcome was mixed. Some held their bonds to maturity and received what they were promised. Others sold early or saw their returns eroded by changes in the broader economy. The key lesson wasn't about one specific bond issue, it was about a new pattern. A government that could fuse emotional appeals, mass media, and financial instruments into a single mechanism. Liberty bonds were, in that sense, a prototype for something larger. They were propaganda made liquid. Every element of the campaign was calibrated to turn feelings into funding. Fear supplied urgency. Images of a brutal enemy, cities in flames, families in danger. Guilt supplied pressure. If you can't go to the front, send your money instead. Pride supplied the sugar. Heroic images of workers, mothers, farmers, shopkeepers all doing their part. Their bond certificates held like medals. The emotional circuitry of a nation was wired directly into the Treasury's borrowing needs. And once emotions enter a marketplace, ordinary decisions start to carry unusual weight. If buying a bond is framed as patriotism, what is selling one? If holding on is loyalty, what is trading out at a profit? In a normal market, those are just choices. In a moralized market, they become statements about your character. The line between citizen and investor blurs. After the war, the posters peeled off the walls. The 4-Minute Men went back to their regular lives. The parades ended, but the bonds and the relationships they created did not vanish overnight. Throughout the 1920s, the Treasury managed its war debt, redeeming some issues, refinancing others, rolling obligations into new forms. Liberty bonds matured, were called, were converted. The debt shifted shape, but the underlying lesson remained. A government had discovered that it could not only tax its citizens, but borrow from them at massive scale, provided it wrapped the task in the language of survival and virtue. And a population had learned that saying yes or no to a financial instrument could mark them as loyal or suspect. The template did not stay confined to World War I. When the next global conflict came, the United States turned again to the same playbook. Posters, celebrities, quotas, emotional appeals, savings bonds marketed as both smart and patriotic. The imagery changed, different enemies, different slogans, but the core mechanism was identical. Turn citizens into lenders, turn lending into proof of belonging. That is the deeper legacy of Liberty bonds. They solved an immediate problem, how to pay for a distant, immense war, but they also opened a door. They showed that wars could be sold not just with speeches and flags, but with subscription forms. They blurred the boundary between conviction and investment, between support for policy and support for a particular security. They embedded the idea that extraordinary state power could be financed by ordinary people if you could just tell the right story. The echoes reach forward into the present whenever you're told that participating in a certain program, buying a certain product, or supporting a certain measure is not merely in your interest, but a test of your loyalty or decency. Whenever a financial decision is framed as a moral duty, you're walking through territory mapped out over a century ago. It's worth asking some simple questions. When you're urged to support a grand cause with your money, are you being treated as a rational investor or as a recruit? Are the risks and rewards being laid out plainly, or are they being drowned in symbols and slogans? Are you being invited to think or pushed to feel? Are you buying an asset because its terms make sense to you, or because not buying would make you feel ashamed? Liberty bonds helped pay for a victory. They also helped teach governments how easily loyalty and leverage can be bound together. The people who bought them did so for all kinds of reasons. Patriotism, fear, social pressure, hope, confusion, calculation. In many ways, they were the first mass financial participants in a modern American state. The bonds matured, the war ended, the certificates faded, tucked away in drawers, redeemed or forgotten. But the technique of turning Main Street into a funding engine through emotion, marketing, and moral pressure did not fade. It became part of the architecture of the modern world. The next time you see a campaign that insists your money is proof of your virtue, remember those Liberty Bond posters and the 4-Minute Men preaching between reels. Remember that governments do not just need soldiers, they need investors. And remember that whenever patriotism is measured in dollars, someone has designed it that way. If this gave you a new perspective, hit subscribe. History has the answers. I'll show you where to look.